so let's talk about the Johnson Beverage. Johnson Beverage case is a simple and straightforward case, and this case is really just to help you design an ABC system based on the information provided and compare the system to the old system. So just remember the ultimate goal of this case is for you to provide a recommendation to the management. And first, to be able to provide the recommendation, you will always want to identify the issue first. When you turn in your case, you have to turn in a report format or like a memo format. Basically, you have to write up what are the issues are, okay? So when you talk about the issues, in the past, a lot of students like to just talk about the costing system directly. They said, wow, the old system costing system is bad and the new costing system is good. And that's why we cannot offer a lower price to our customers as our competitors. But in reality, you actually don't know where the issue is. Therefore, I wanted to first identify the issue more on the strategic business level. The issue you have here, fairly straightforward. One of your largest and most loyal customers, and the competitor can offer a lower price. And now you have facing a dilemma, right? The first thing you don't know, can you actually match the lower price provided by the competitors? And even you can, and what's the impact on the other customers? So that's the real dilemma you are facing now. But before you provide any recommendation, only based on a costing system, you want to make sure there are not other factors which cost you can not be able to offer a lower price. So really think about what is the costing system? Costing system is just going to allocate the cost in a different way, but has no impact on real cost. But it can be true that the competitors can offer a lower price, not because the allocated cost is lower. It can be the real cost is lower. For example, the competitors may be able to transport the merchandise to the customer at a lower price. How was that possible? Maybe their warehouse is closer to the customer, so they only need to drive 2 miles to deliver the merchandise, but you have to drive, say, 25 miles. So therefore, like before you give out a recommendation, only based on the costing system, I do want to think outside the box. What can be other factors that cause the competitors offer a lower price? And also, how can you actually rule out other factors? For example, let's go back to the example I gave you about the transportation cost, right? I said that it may be true the competitors can deliver the goods to the customer at a lower price because the distance is shorter. To make sure that is not one of the factors, what you can do, you can say, I'm gonna talk to the management and say, we're going to actually drive just to see where the distribution center of the competitor is. So here, what I'm trying to say is if you have other factors you think can contribute to the lower competitor's price, you wanted to provide a suggestion to actually verify is that the true reason or not, okay? All right, after you rule out all other reasons, then what you want to do is say, let's think about maybe it's just the way we allocate our cost is not accurate. And before you do that, or you can talk about this because this is one of the questions I'm asking in the case is you want to summarize the two systems, the old system and the new ABC system, the pros and the cons, and what is the fundamental difference. I'm also going to talk about how to actually present the result. I'm going to provide a couple of templates, but you don't need to use, okay? You can use whatever the format you prefer. But basically to design an ABC system, first you want to start with track the quantity of the cost driver per customer for each activity, okay? Next, you want to calculate the allocation rate. So allocation rate is essentially the total activity budgeted divided by the total quantity budgeted. And here, when we talk about the total quantity, you have to add all the quantity for all customers together, okay? And then you calculate the allocation rate. This allocation rate has to be the same for every customer. Next one, you just allocate. To allocate, you use the allocation rate multiplied by the actual quantity of each cost driver for each customer. Okay, you have to do this for each customer. Just remember, even the allocation rate is the same, but the actual quantity is not the same. So for each customer, the cost allocated should not be the same. The last one, after you have a cost allocated, and then you want to create this income statement. You want to do this for each customer and then for the Johnson Beverage as a whole. Just remember here, the cost that we allocated is actually the customer service related cost. So cost of goods sold is still the same, okay? You just allocate the customer service cost. You wanted to calculate the profit, and you also calculate the profit margin. Basically here shows up as a profit percentage. To calculate this, you take the profit divided by the revenue. After you have all this, you should be able to compare the numbers you get on the different system, the old system was a new system, and you can see what the real issue is, right? Which activity is really generated the most cost, and what is the different price you will offer on the new ABC system. Okay, so that's basically it. It is a very straightforward case, and I would say the cost information you get should be very similar among all groups you have. Here, you may give slightly different suggestions, but for this case, it's fairly straightforward. So the answers should be fairly uniform too, okay? So just make sure you do the calculation correctly. And when you write it up, make sure you know you're writing to the management. Okay, so writing a standard memo format, and make sure the way you phrase your report in a very professional way. So that's all, and see you next class.